If you are looking at the chart, you should know by now New Zealand yen is on a bullish run, right? So this is pretty obvious from the weekly to 1 hour chart at least right now. So buying will be known as trend trading, and if you're looking to sell, you're counter trend trading. What's the difference? You need to be a bit more conservative if you are counter trend trading, especially if you're doing it firsthand, right? So if the overall trend is now super bullish, you need some form of confirmation like a double top. I'm not saying that double top is the one that you should be looking for, but I feel that double top is the minimum I need for a counter trend move on a very strong bullish trend. Even though on the weekly chart, we could see that the ABCD pattern has completed on the completion price 75.33 over here, I will still need to see a double top before I could engage this trade on this time frame. So it will take months before I will engage this trade because it's a weekly chart. On daily chart over here, likewise, ABCD pattern completed on the daily chart, then it could take me maybe, let's say, a week or two before I could head in for an aggressive selling opportunity. So meanwhile, should the market retest at 94.12 or this blue zone over here, I'll be waiting for my magic candle confirmation to head in for a buying opportunity. Then this is when confusion will seeps in. Traders will be thinking, I thought you are saying that you are going to buy. Why don't you buy now? That's just my style, right? And if you are going to buy at a lower price, could I sell now? Yes, you could if you have a tested strategy. But at this moment, I would rather to miss the trade, should the trade just keep on going higher, than to try to force it to sell it and try to grab all the move. Right, so I hope I make things very, very clear over here for you, or slightly clearer for you, right? So key support level on the 4-hour chart, 94.30 is the price I'm watching closely. You can see that it is a rather close range, but because the volatility of New Zealand yen is very, very strong, so this range is basically more than 100 pips away. So always measure your move and not assuming just by looking at the chart, because the chart is designed to fit the screen size. So in a low volatility, a huge candle could basically just mean less than 20 pips, while a small movement in a very volatile period could mean hundreds of pips literally. Right, so 1 hour chart, nothing much for me at this moment unless the market, have a huge retracement, touches 94.14. I do apply breakout trading, but not in this way, right? So if you want to find out what trading style suits you, drop me a DM.